Continue this conversation. Joining us now with more reaction to Raphael Bostic and the January Fed minutes, we want to bring in Eric Rosengren. He's the former president of the Federal Reserve Bank of Boston, also a visiting scholar at the MIT Golub Center. It's great to have you here, Eric. Thanks so much for making the time to join us. So let's combine some of the commentary that we just got from Bostic as well as what we're hearing or what we're seeing from the Fed minutes. Obviously, inflation very much still a concern here amongst policymakers. They talk a little bit about tariffs, the impact that could have on inflation going forward, some of the other policies coming out from the administration. Where do you think we stand in this fight to tame inflation?
Well, I think you start with the data, and the data that we already have had has pretty much leveled off over the last 6 months. That's with both the CPI measure and the CPI data that we just got out recently that had 3% for the CPI, 3.3 ex food and energy. The PCE also has been pretty flat over the last 6 months. So as long as inflation's staying flat at levels that are above the 2% inflation target, it makes sense for them to be on pause regardless of the policy uncertainty. When you add policy uncertainty on top of that, it highlights that you really need to start seeing some improvement in the ongoing data before I think the Fed's going to be willing to seriously consider easing further.
Well, and I thought one of Bostic's interesting notes there was that not only do you have policy uncertainty potentially creating upward pressure on inflation, could potentially create downward pressure. I want to play for you what he just said and get your take on it.
I've talked to a lot of business leaders who are quite optimistic about what's going to happen on the regulatory side in particular, and they think those effects may actually swamp what happens in other areas. And so I don't want to presuppose anything at this point. As I said to start, I'm worried about everything, but I definitely want to make sure that before jumping to any conclusions, I see precisely what the policies are.
And of course, Eric, that's the challenge, right? When do we start to see? I mean, we don't even know what, all the complete suite of tariffs at this point. We don't really know the effect of deregulation. When do we start to get some clarity on any of this?
Well, we do have a little bit of clarity. We have 10% tariffs on China. 10% is not a small number. We also have tariffs on steel and aluminum. That's a significant input into car prices, for example. So we don't know how long they will continue to be at the level they're currently at. They could always be dropped. But there have been tariffs that have already been put on. Now, there are additional tariffs that are being considered. That certainly, it looks like the effect from tariffs are more likely to be front-loaded, meaning in the next 5 to 6 months, we're likely to have more clarity, but to the extent that more tariffs are coming on, that probably will happen in the next 6 months. I agree on the point with regulation, but regulation doesn't move very quickly. So usually it requires the regulatory bodies to get together. Sometimes it requires legislative changes. That's much further out in the future. So that has the potential to bring prices down over time. But I think some of the inflationary policies, which would be the immigration policy and the tariff policy, are more likely to hit the economy over the next 6 months, which is exactly why the Fed should be pretty cautious before it decides to undertake further easing. So in the absence of the tariffs and the absence of immigration, I think a pretty strong case would be made that the trend for inflation would be moving down towards 2%, probably over the next 6-month period. But given the policy that's being suggested and some of the policy actions already being taken, I think it's unlikely we're going to see that much progress over the next 6 months.
And Eric, just given that and given so much of that uncertainty, how much of that do you think is really interfering or sidelining some of that global investment and then the cascading effect that could potentially have on the economy as well?
Well, I think it affects both consumers and businesses. So in a world where you don't know whether they're going to be tariffs of a magnitude of 25% or higher, it starts affecting your decisions about what to buy now, what to buy later. And for investment decisions, If before you're going to deploy hundreds of millions of dollars to build a factory, you're going to want to know what the tariff policy is and how long it's going to be in place. So if you're serious about trying to get businesses to try to open up factories in the United States, one, you have to think about even with the tariffs, does that equalize the wage differentials depending on what countries they're moving to? And I think you also have to consider whether the tariffs are likely to be permanent or not. If they're not going to be permanent, you don't build a very expensive manufacturing plant in the United States, because then when the tariffs go off, you're going to have a stranded investment in the United States. So I think this uncertainty actually is quite destabilizing, both to business decisions, but also consumer decisions on buying cars, to the extent that China and emerging markets are producing a lot of our apparel, for example. The reciprocal tariffs could have a significant effect on prices for apparel. So I think that uncertainty is likely to be a damper on growth that we would otherwise be seeing.
All right, Eric, always great to get your insight. Thanks so much for taking the time to join us here today.